One of the best tax deductions that you can get is paying your kids for work that they do for your business. This works extremely well because the business gets a deduction, and as long as your kids are paid under the standard deduction for the year, they don't have to recognize the income or pay any tax on it, and oftentimes don't even have to file a tax return. My name is Merrill Taylor. I am a CPA. I've been working with clients for over 20 years, helping them save tens of thousands to millions on taxes using proactive tax strategies through our tax planning methods. Let's talk more and get into more details on paying children. It is a very powerful deduction. As we record this video in 2025, the standard deduction is $15,000. So you could pay your children, each of your children, up to $15,000 without them having to even file a tax return or pay any tax on it, and the business gets a full deduction. If you had, say, 2 or 3 kids, it starts to add up. Those deductions could be $30,000, $45,000 or more and become very powerful. The tricky part is that it's usually like a really short, very narrow window of when you can do that. They have to be under 18 years old to completely avoid any of the payroll taxes on it. Once they become 18 years old or older, you have to at least withhold payroll taxes on them. If they're under 18, there's no payroll taxes, but they still have to be old enough to be like what I call useful and actually being able to do things. Paying a newborn $15,000 a year, a little tricky. I mean, there could be a modeling type thing if you're taking pictures and putting it on a website. So let's go through kind of the requirements and what the IRS would look for in this sort of a situation. First off, they're going to look for something reasonable being paid to the children. They want to be paid for their age-appropriate work that they perform. And it needs to be a fair market value of what they're paid. You can't pay them, say, $1,000 an hour to take out the trash and vacuum the floor. That's not a fair market value wage for that. So you've got to pay them something reasonable for the work that they're performing. The work needs to be documented. You need to track their hours and keep track of that so that if the IRS were ever to look at it, you would have their time log basically of when they worked, what they did, and how many hours that they worked. You need to actually pay them. So the money should actually go to their bank account and be in their account. And then you would issue tax forms to them as well. W-2s and payroll tax forms would be filed. Even if there is no payroll tax due on those forms, you would still file those forms. Now, what does this actually do? What is the benefit for you, for the business, and for the kids? Well, for you and the business, it shifts that income to a lower tax bracket. So let's say you are in the 25% tax bracket and you pay your kid $10,000 for work that they do. Well, they don't have to pay any income tax on that $10,000, but you get a $10,000 deduction in the business, which then likely flows through to your personal tax return and would save you $2,500 in tax if you're in the 25% tax bracket. Let's say you have 3 or 4 kids like that, that could be up to a $10,000 tax savings or more, depending on kids and how much they work and everything. So it starts to add up. Now, those kids, since they're receiving W-2 income, even though it's not taxable, it's still considered earned income to them, which enables them to contribute to an IRA. Now, in this case, we would say don't contribute to a traditional IRA because what's going to happen is there's no income, there's no income tax on their income, so they get no deduction basically, but then they have to pay tax on that IRA distribution when they take it out in retirement. Instead, they should put into a Roth IRA. The Roth IRA is not deductible going in, but that doesn't matter because they're not paying tax anyways, and then it grows tax-free all of their life. And when they get to retirement, there could be significant amount of income that has built up over that time that they will never, ever have to pay tax on. So it works extremely well for them to take that money and put it into a Roth IRA. It teaches children about financial responsibility, work ethic. A lot of times you could say, let's say you pay your kid $10,000, $5,000 goes into a Roth IRA. Now they got $5,000 sitting there. You can teach them how to invest that in some other way. You can also shift your expenses to them. Maybe now they pay for their own school registration fees, or they pay for their own clothes or their own school supplies, or maybe they're paying for their own entertainment and fun and events, or however it is. You can start to actually help your kids budget and understand how money works and how they need to save and take care of those things. So the tax-free threshold, like we went through, 2025 is $15,000. So whichever tax year we're in, just do a Google search. What's the standard deduction for X tax year, and that's what you can pay the children up to. Now there is an issue that creeps in based on your entity type. So paying kids is always income tax free up to the standard deduction, but it's not always free from employment taxes. If you are paying your kids through a sole proprietor or a single member LLC, so this would come out of like a Schedule C on a 1040, then if a parent is paying a child for work being done and that child's under 18 years old, then there's no requirement to withhold payroll taxes. So it's completely tax-free. No income tax, no payroll taxes. Same thing if the child is paid from a partnership entity, like an LLC that's taxed as a partnership. As long as both parents are the sole owners of that partnership, then the same thing applies, that it comes out not subject to employment taxes. If there's an unrelated, if there's a partner in that partnership that's not a parent of the child, then payroll taxes have to be withheld on that, unfortunately. So it works well for a parent-owned sole proprietor, single member LLC, or a parent-owned partnership that's solely parent-owned. When we get into S corporations and C corporations, we lose the ability to not pay employment taxes. So kids that are paid out of an S corporation, you have to withhold payroll taxes on them, but not the income taxes. So that's not as efficient, but still could result in some significant tax savings. Payroll taxes are 15.3%. If the parent is in the 37% tax bracket, plus whatever state taxes might be, that's still significantly greater than the 15.3% bracket. So it's something to look at, what tax bracket you're actually in and how much you're saving that way. Now, some of the best practices, you want to create a written job description for the child, so that if the IRS were to audit it, you'd say, here's their job description of what jobs that they perform, and then maintain a timesheet for that. Pay them by check or direct deposit directly into their personal bank account. Fund a Roth IRA with earned income. That earned income is what's coming through that W-2. File the W-2 and all the payroll taxes that are associated with it. And then just be ready to have all that documentation in case you are audited by the IRS. There are some common mistakes that you want to avoid. Don't pay kids for work that they don't do. Don't pay them excessively for doing simple tasks. Like my daughter comes in and she cleans our office every week. My wife's very good. My wife works for the company. She's very good at keeping track of her hours of when she's here, and we pay her a reasonable salary. We're not paying her for time she's not here, and we're not paying her $1,000 an hour. We're not paying her $100 an hour. It's probably more like 15 or 20. I'm not sure what it is, but it's definitely under $20 an hour that she gets paid. I would think. So anyway, and then make sure that you don't skip the documentation and the payroll records. And then, if you're paying from an entity like an S Corp that requires payroll taxes to be withheld, make sure that those payroll taxes are being withheld and paid. So for more updates, make sure to subscribe to our channel and go to taxtutor.com and subscribe to our weekly newsletter for updates as well.